folks, I'm Melly Little and this is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we're asking ourselves what happened today and what does it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what was another hailstorm day in the Rocky Mountains. 2 in a row in the hail department here in the mountains. I don't think it's 2 in a row in the market though. Every other day is a flip-flop anymore. Today we actually bounce back, flip around the other way, take them higher. Dow Jones takeaway bar today, 158 3/4 higher, 16,533. S&P's 15 higher, 1888, crowding the top again. Composite 34.5 higher, 4131. That one's still struggling. NDX though is on its move, 35 higher, 3635 and a half. And the Russell, they just can't get this right anymore. Russell was up today. Let me see what the ending number was on it. Let's put up the Russell real quick. And Russell was up, why am I looking at that? It's the same quote system. Let's look somewhere else. Let's go over here. How about Russell over here? See if we can get a good quote here. So what are we up? Today was up, I don't know, it was up like 10 points. It looks like the opposite of what it says. I also took these numbers late. Oil was up $1.50 today. New highs, breaks over the highs, a suspect breakout. Dollar was flat. Bonds were actually down slightly. They're up after hours. And gold and silver, they were pretty much flat, I think, by the end of the day. Gold was down quite a bit. Actually, gold was down, I think, like $2 today. Not much. So let's go look at. Let's look at the indexes, and it looks like 2 days in a row here I'm not getting my quotes, so we'll have to use a different quote system here to get the quotes on the indexes. So let's get this so we can see it. Let's expand this out so you can see it better. There we go. Okay, so let's start with the SPX. Right? Let's start with the S&P 500. If we look at the S&Ps, what do? Well, it's a takeaway bar of yesterday's decline. Volume's lighter today than yesterday, which is typical. As we go up, we lose volume. What we did do today, though, and actually it would be better if I pulled this in a little bit. Let's see if we can let's do this. Let's pull this into 3 months so we can actually see this thing. Get too many bars on it, you can't tell what's happening. Now we can see it. All right, let's try again. So the key here is as we're coming back up, right, we had a breakdown bar off the top. That top was testing this high, breaks down. Top of that breakdown bar is 188.16. Volume on is 2.3. We go over it, 188.80, close under it, 188.03, so just a few pennies. Volume 1.7. 1.7, 2.3. You're coming in there with about 6.6 less. That is a failure, right? You go over, back under, you fail. Failure on price, failure on volume. That's the S&P. Now the Dow, different story. Dow goes right back up. Now the Dow yesterday had broken underneath. If you remember, we had a swing point low over here. We broke underneath it. And then what do we do today? We take away everything bad about yesterday, run right back up. Dow actually looks like it can trade higher, even on the lighter volume. That's the Dow. Composite. On the composite. So on the composite, it's a totally different story than what we're seeing on the NDX. The composite can't even get back to the breakdown bar, right? If we draw this in here, right, your breakdown bar is here, right? It's still struggling with this area, so it can't even get there. So if you're looking at, a broader set of stocks than you are in the NDX, which is concentrated in the top 100. That broader set is really struggling, and that broader set hasn't been able, to get up there at all. And there's really nothing here other than the fact that it does climb a little bit today. First test will be here, the next test will be over it. The breakdown bar is the real test if we get up there. Now the NDX, that was the wild card, if you remember, coming in this week. And the wild card in the sense that the NDX was the one that would either push us higher or lower this week. It gets over, the key on it is it was over this first breakdown bar. It was April 10th bar. April 4th bar is the next breakdown bar. And the bar with a lot of high volume on it is the bottom of the 21st. That low is 36.43. That now looks to be where it's headed. 36.43. It got as high as 36.36 today. I would think we're going to tag into that tomorrow. Right? That's about 6-7 points higher. I would think it's going to try to tag into that tomorrow. And I suspect that's where you're going to see this thing start having more serious trouble. The big moves, well, they've been on Apple, they've been on Google, right? This whole area here is going to be tough to get through, especially when you're not getting broader participation in the other stocks. So we go up, volume is lighter, we're pushing up, we're over these areas though, so we can push on up now. It's going to come up in here and tag this, and we'll see what it wants to do when it gets there. But I suspect this is going to give us some trouble as it comes into it. So that's the NDX. NDX still can go a little higher. So you got a failure on the S&Ps. You got the Dow that can go higher. You got the NDX that can go higher. You got the composite doesn't know where the heck it's going. It's just hanging at roughly the lows. And then you have the beautiful Russell, right? The Russell has been the story forever on the downside. So what does the Russell do? The Russell comes into, well, it actually didn't get into it. The bottom of this big bar, and we don't have volume on this particular chart. We'll switch over to ours here in a second. Matter of fact, let's just switch to ours. There's nothing else to do here. So let's go to the Russell. So on the Russell, and let me pop over to the TA Today charts so we can see the markings. Okay, so this bar, let's explain it this way. Let's go at it this way. All right, so when we came off the lows, right, we broke the lows. Oops, wrong one. Try that again. All right, here we go. When we came down, we broke the lows on this breakout, that suspect break. That suspect break was getting underneath this low. So we're coming underneath this low. Suspect break, flips around, right, heads back up, sets a swing point high. That's a wide price spread bar there. That bar is the, let's see, that's the May 12th bar. So we get a wide price spread bar on May 12th. Now we're coming into the bottom of that bar, and actually this shows it not quite right. The print's just a little bit different because this was an inside day today. It didn't print higher. So the Russell's coming into that area, doesn't have the volume, looks like it's probably going to fail. And if we go over and flip this to the IWM so we can actually see what volume took place today, at least on the ETF, you can see the little doji inside bar. That usually ends up being a continuation inside the big bar from yesterday. Now the volume on the Russell yesterday wasn't nearly this big, so it's expanded here on the ETF itself. But it's inside bar, trying to get into this area, having a hard time getting back up there. Russell still wants to go lower. Whether it pulls back up here and tries to get back up to these highs, or whether it simply fails here and heads on down, that's a different story. Now, one thing we had talked about, and we don't want to lose sight of, is that on the S&P 500, if it gets through this week, and we put it on the weekly, if it gets through this week, without making a new, without testing this low, which certainly seems to be what's going to happen now, this is going to print as a swing point low. And I keep talking about the fact that we need a reset. So we're going to get a swing point low here. That means we can come back to this area. That's about 1820, I think, 1814. We can come back to the 1814 area, and if we get back down there and get underneath it, we'd finally get a reset. We'd get a reset on the intermediate term, we'd get a reset on the dailies, and then if they can come back up and actually start making new highs, we could actually have another big run to the upside. I believe that's what the market wants to do. The market doesn't want to decline in any large way. It simply wants or needs to reset. And instead of getting a reset, we just keep getting the slow bleed, less and less stocks participating to the upside, yet the indexes hang up here. And we've had this for so long, it's almost like some of the other things that we've seen, like the V-shaped reversals, the infinite hang, ever since the 2009 with the intervention of the Fed, we've got all these new things that happen, and they happen with regularity. And now we have the infinite hang taking place. The absolute divergence infinite hang, maybe, is what we ought to call this thing, because anymore nothing is normal. Everything is abnormal anymore. Abnormal is normal. Let's pop over to the sectors, because the sectors, even though we got the big bounce today, other than the transports, which you see here in the technology, which I'll do next, they really didn't do anything that interesting. Transports hanging at the highs, one of the strongest sectors. XLK, the other strongest sector, and this is basically the NDX. Going up, testing the highs. Actually, it's even better than the NDX, because it's testing the highs. Tested them and failed twice in a row, gets over them today, actually gets a breakout. It's going to be suspect, but it did get a breakout. But I suspect it ain't going very far. Now, we've seen over and over to the upside failures. Here again, you got an ABCD structure to the upside. I don't know that it's going to be able to complete, because everything that we've seen to date fails and comes back when you get these upside, situations, upside structures like a bullish ABCDs. So we'll see if this can get any legs, but I think it's going to be extremely tough. And when we go back and think about that NDX I just talked about, I think it's going to be doubly tough given what it's coming into. Those were the two strongest today. If you go over and look at the rest of these, they're going nowhere fast. Here's the SOX. You can't get any kind of lift really. The XLB. This one actually did a successful retest regen so far. So we actually came down here, did a retest regen off of this area, right? Got towards the bottom of it, regenerating higher. But what did we do? We go up here, we fell on the breakdown bar. Now we're climbing up there to try it again. Look at the volume tells. This thing ain't gonna go anywhere. XLE. Now this was interesting, because today this was like power move off the big move that happened in the oil market, right? Oil was up almost $2, breaks out. What is this doing? It's just doing what it just did. You had a breakdown bar here, you climb all the way back to the top of it, you fail, and then you get another breakdown bar. And now you're climbing back up to the top of it. Probably going to fail and get another one. These sectors are not showing any kind of significant strength, right? At some point they will, but right now they're not. Probably the only other one, well, actually you can look at the XLF. This one had a big day today, and what does it do? It still fails on the latest takeaway bar from the 15th. So sector-wise, I don't really see anything useful. I just don't see what's going to push us higher, because there's not broad participation on the upside in these markets, period. It's just not there. If we look at the TLT, on the TLT we've got the same sort of scenario where we're pulling back. We've seen this plenty of times, right? We're pulling back. ABCD structure set up again to the north. Going to try to do it again, right? And what are you pulling back into? You're pulling back into huge volume in this area. This is probably where the buyers are going to step in one more time. You're coming back with a little bit more volume this time, but I suspect you're going to see them show up. Maybe it's at the bottom of this bar since we're so deep into it, but you got big volume here you're coming back into, and you don't have the volume on the retrace. So I suspect you're going to see this thing flip around and try to go back up. Now remember, on the weekly there is resistance here as well, so I don't know if this is going to complete this time, but it certainly can bounce back up here, test that high volume high at left, right up there at the top. So TLT almost to the point where it wants to flip around. And let me see, what else was there? I think those are the main things. The gold and silver, you know, gold tested to the downside, failed to break down. That looks like it's going to try to flip around a little bit. Silver just held, didn't really do anything. All right, I see a couple of questions. Let me pop over and take those, and then I'll come back to some other thoughts. And checking my email to see if I have a question here. I don't right now. So if you want to email me questions, support at tatoday.com. You can text me 303-912-9110, and I'll take them from there as well. So either way, multiple ways to reach me. Of course, if you're like Tommy or Federico, you just type it in. Can you take a look at CLMS? This is like became your favorite stock, man. All right, remember this thing was coming down. Yeah, this is actually, okay, so all right, so this is, okay, so you got to push up, you tested over this bar, right? You got over it, back under it, you're doing a retest regen now. No, I take that back, not a retest regen. You got over it. All right, so let me back up here. Sorry, my mind just went blank. All right, we set a new high, got over this bar. That new high immediately gets a retest regen attempt and fails. When that happens, that tells you you're still in some sort of a range. And so that range is from the bottom, right, on up to this area right now. Up above that, of course, is a higher range if it can get up over this area now. There's just really nothing here yet, right? So, you know, we followed this when it first broke down these swing point lows. We thought it would hold because of this. It did hold. It got a bounce. I think you're going to see it test again before it's over, test this low again, because it just doesn't have anything to the upside. So I'd probably be looking to take some money off if you can get a test of the swing point high again. And then look to buy this bottom one more time. I still think you can buy this bottom, but you just have to let it test again. Let me see the weekly. Yeah, I think you will get another test of that bottom. So I would definitely try to take some money around, looks like about 1260 to, yeah, about 1260. I'd try to take some money there. You don't want to ride this all the way back down. You're going to make some money on it, make your money. Let's see, do you have a sense of what sectors will remain strong after any pullback? Well, I think you have to look at the weeklies. If you pop over, one of the things you can look at, and actually it's here, is you can look at the trends. This is one place you can look, and you can see what kind of confirmed bullishness you have versus suspect. So right now, energy, technology, discretionary, staples, and healthcare. We know this one's struggling. We know this one eventually will come back, but it's still struggling. So that really kind of leaves staples, technology, and energy. I don't have IYT on this board, but that would be another one. So I think those are the ones I would look to, although I think energy is struggling right now, so that kind of brings me down to technology, staples, and potentially healthcare once the biotech stuff plays out. Not a lot to choose from there, huh? That's probably the best sectors. Now there are some subsectors that still look good. You know, for example, the IYR still looks good. So I think this one will stay strong. It's going to get another pullback here and test this low and eventually probably come back down and test the highs where it broke out from. But, you know, in general, this is not a bad looking sector. And if you look at it on a weekly, it looks pretty nice. So, you know, climbing back up to this breakdown bar, the top of that 73.22. If it can pull back into this high, volume not too heavy, that would be a nice one, right? Because this one actually has another ABCD structure in place. And it didn't, I don't think it quite finished it. It got pretty close. 72 was, I think, the mark. And it got to a little bit lighter than that. So, yeah, a little bit shy. So, you know, if it pulls back into here, you know, you get another run up there off another ABCD structure. And that's another nice one. You know, outside of those are the ones that come to my mind. So, considering the possible European QE coming up, or should we look overseas? Yeah, I mean, the European markets, they're not going to sell off big over the next 2 weeks. Yeah, they can pull back, but they're going to get bought. Because the expectation is, at a minimum, you're going to get negative interest rates on the banks to force them to loan, and you're going to get another rate cut. And if it's really good, they're going to give QE as well. And so those two things are baked in, mostly priced in already. You'll still probably get a pop on the news unless you're at new highs already, and it doesn't look like that's going to happen. And then after that, if you don't get the QE as part of that, then I think the market, maybe it runs a little bit higher, but that's about all it's going to do. On the flip side, you know, if they disappoint, well, that's going to be a big disappointment. But I can't imagine that because, you know, Draghi has promised stuff for so long. Now he put a time limit on it. If he doesn't deliver on this one, man has no credibility, right? I mean, it's amazing to me that 2 years you could talk the euro down for 2 years without doing anything. So if he doesn't deliver now, man's got no credibility, and I don't think he can risk that. So he has to deliver. So he's going to deliver probably those two things I just said. And that, you know, if he doesn't deliver the QE, it's not going to help the other markets that much immediately. If he delivers what it looks like he's going to deliver, it will help the European markets, but that's already being priced in to some degree, and eventually that kind of helps us because Europe gets better. Assuming the banks actually start loaning. I don't know if that's what they're going to do. I mean, if I have to make loans that I think are too risky, I may not park the money at the Fed. I may park it at another bank or something. You know what I mean? I mean, there's probably ways around what he's trying to force. So, you know, we'll see how they lay it out and what it actually does. CLMS, testing the lows, yeah. I mean, he's coming back up to do the test. Let me get off the weekly right quick. Oh, I put the wrong one in. Hang on. Let's get it right. CLMS. So, but that, you know, the swing point lows had already been tested, right? That was what the last test was. So you take the lowest one, and I forget which one it was. You have to look at the numbers. This is 42, that one's 42, this one's 43. So actually it still is, you know, you come up and you tested them once. So yeah, you know, technically, yeah, you still are. You can test up to that far. And so yeah, you could get back to the highs. But just the way this came up, you know, it looks to me like this is kind of going to hold you right here. And so I would be thinking you want to take some money here, look for this retest back down here, buy it again, and then expect a larger push eventually. I just wouldn't give up the money that where you bought it down here. You know, if you come all the way back down here, you gain nothing. Even if you don't sell it all, you sell half of it or something, right? And then you try to get the rest of it back down here again. I mean, I just think that's a money management decision. Okay, so you know, flip a coin. We go up, we go down. Seriously, that divergence is huge. Test failure on the SPX. Sector's not telling us that it can go higher. Overseas market still holding, right? That's a positive for us to hold us up. A slow week because of Memorial Day. Volume's going to tell off even more tomorrow and the next day, especially on Friday. So, we are going to get economic numbers tomorrow, though, and their PMIs and some GDP out of Germany. So tomorrow we may see some increased volatility, and it could be right back down to the other side, because eventually these economic numbers have to start improving significantly, or this market, in my opinion, is overpriced. The assumption here is that the economy is picking up because the Fed keeps telling us that, because they keep tapering. Well, the Fed has to tell us that because they are tapering. If it doesn't do what they say, or we don't see evidence of that pretty soon, within the next month or two, it's going to be hard to justify these prices, in my opinion. All right? Okay, I'm going to leave it at that. I thank you for joining me. You tell a friend, tell two. I'm LA. I'm here for you. This is and was your daily TA wrap. Have yourself a great night. Take care, and I'll see you next time. Good night, folks.